last week, that interview with Lloyd Blankfein, just saying, listen, do not trust the 10-year to be necessarily a perfect sign of what's going on in the economy. But I felt good after speaking to FHN. I really did. I said, okay, you know what? It's full steam ahead unless we have sanctions and China tariffs that really do slow things.
And right now, you don't see that as occurring.
The tariffs?
Yeah. No, I'm saying that slow things to your final point.
Exactly. I am very worried about May 1. And look, my politics aside, I think that the president's doing the right thing against China, but not for the stock market. But May 1's the deadline. Let's see whether there's something that can happen between now and May 1. And I think that every time the market lifts between now and May 1, people are going to be scared and they're going to sell. And the idea of Apple stabilizing, I guess someone's going to stick their neck out and say it's okay, but I keep thinking about what Katie Huberty said last week from Morgan Stanley. And that was one of those which just said, better wait to see the number. I want to wait to see the number.
Yeah. Brainerd last week, her comments were about companies with short-term debt obligations. We got record global debt, period, right, but record corporate debt. And if the short end rises and you got these business models that are based on cheap credit, when does that show it? When does it present itself? When does high yield start to crack? That's the other question.
There was a lot of money going into high yield last week. Big amount.
We should point out spreads right now are as tight as they've been.
Right.
There's no give up there. By the way, also IG spreads are also a little bit wider, but not much at all. So it would be the overall cost of capital, but it doesn't appear that there's any widening of any significance going on.
And S&P's telling me just now Netflix is doing a drive-by $1.5 billion offering of 10.5-year bonds. Non-callable. Ooh, that's an attractive piece of paper. I mean, there's a company that's so proud of its burn rate.
Well, it's amazing. I mean, but there you go. $1.5 billion, 10-year money. What are they paying, Jim? 4.875. Is that what I'm reading?
Yeah, June 2028. That's there you go.
Money. That's not bad, right? 4.875 over a 3 on the 10-year.
I think
so. That's it. 1.875, 1.8.
Who knows? How little they'd have to pay if they were going to lose $5 billion instead of be so proud to lose that 2 to 3.
Well, they're raising 1.5. You know who's raising 96 is the U.S. 96 billion this week in 2 5s and 7s. That's the biggest slate since 2014.
Yeah, but have you seen Netflix's slate? It's a heck of a lot better than the Treasury slate. You know what? In Westworld, we trust. I mean, come on.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.